Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar has cleared the level of 71.55 and now looks further to the upside. As the technicals remain bullish, we could see a rise up towards the region where that 60-day moving average is at 72.6065. I like the way the pattern's structured, and along with that, with the ADX supporting the trend, could actually see a further rise as we look at the MACD. The euro is still pushing that topside resistance around 107.85. I feel that while the dollar index, which measures the greenback strength against a basket of 6 major currencies, consolidates around 101.60, is that we could see a further rise in the euro. Along with that, the US is out on Monday in observance of Memorial Day. Any pullback like to be shallow. The dollar yen still remains rather heavily on that level around 127. I do anticipate eventually we will see a market take a tumble, but it will probably be brief as the bulls still seem to be preparing for any ambush to the bearish case. Nevertheless, let's see if the market can start edging its way lower to 126 and reassess from there. With all eyes on the Bank of England in June for a potential rate hike, I do feel that the sterling pattern is still holding bullish, with the ADX still supporting the positive sentiment. I feel the market could easily extend up towards this trend line, which comes in roughly around about the 127 and clear that level and move on towards the region around 127.5 to 128. I do like this pattern, and even on a broader sense, the market is somewhat positive from the close of New York on the weekend. Let's see if the bulls can continue their pace. The pattern for sterling Kiwi is broken down and near enough reached part of its target of 192.5. I feel there is still room to 191 as the technicals are heavy, and the retreat from that midway point does give further indication and the break of this trend that the down case is still favourable. Market for gold is still relatively stable at this point as it hovers above that 1,838.42. Although I am bearish, I feel the market, any rise should be contained by 1,870.80 and eventually see the down test and maybe break this level of 38 and expose the bottom side of this range that was recently challenged and posted a bullish hammer at 1,788.92. Market still seems relatively firm as the tension between Russia and Ukraine continues. Apart from that, the market bulls are still looking towards this top side around 114.82, maybe up to as high as 118. I don't really have a strong view at this top side of the range because the market has plummeted many times as we get closer to 120. So therefore, we could anticipate another rejection in the short term. Well, that wraps it for today. Thank you very much for joining me. As always, look out the intraday report. I hope you enjoy the great start to the new week.